Good morning, everyone. Mike Fibernitz, Remax Southern Shores, coming to you for another Fibernitz Friday, where we throw Casual Friday out the window. Still ending the week on a high note, wearing the suit, the tie, and the customary pocket square. So I just had a moment of fear because I forgot to check my mic, but my mic is rocking and rolling. So if not, then I know my buddy Jesse would definitely let me know. But let's go ahead and jump into the numbers for this week's market mashup, and then this week's topic, which is an insane topic that's going to disrupt the condo market. So real quick, let's take a look at the three markets I report on. All right, condo market's up 0.1%, brings you up for the year 6.6% this year compared to last year's average sales price. Residential market up 0.1%, brings you up for the year 2.8%. Land market, you got beat up bad this past week, down 2.6%. Brings you down for the year 2.6% compared to last year's average sales price. So, with that said, this week's topic, which if you can, read in this post, insane updates on condos and their insurance. Now, insurance is the main concern, the big talk when it comes to condos right now. It's even, the talk in the residential market just because of the cost has doubled or tripled, and it is really becoming a huge concern, especially in the condo market. So here's what's going on, all right? And it's not that great of news, but it's a great topic to do today. So if you own a condo here in the Myrtle Beach market, I don't know if other markets are doing the same or experiencing the same, but here's what's going on in the Myrtle Beach market with condos. So basically, we all know insurance went up this year, went through the roof. And on top of that, these insurance companies are assessing the condo buildings in a condo complex and going, we'll insure the entire condo complex, but any roof that is of a certain age or older, it's coming in around 10 years or older. If the roof is 10 years or older on that building, we're not going to insure it. That's on the HOA. So what happens is the HOA, they don't have many other options, so they go, okay, we'll do that. We'll take the insurance, and then we'll cover the roof, moving forward through the HOA, through insurance assessments. Good news is it's keeping the insurance payments down compared to what they could be. If you went with a different insurance company that would insure the roof as well. But here's where the problem comes in. This makes these condos non-warrantable when a buyer goes and gets financing on them when they want to buy your condo, which Fannie and Freddie Mac won't touch if they're non-warrantable. And in order for a buyer to buy a property or a condo that's non-warrantable, which is in this case, they were going to have to get financing very similar to a condo-tel, which a condo-tel is similar to oceanfront condos that run like a hotel. And this is happening in condo complexes off the ocean, right? Now, financing on non-warrantable condos like this is possible, but it's going to be tough, especially with this type of issue regarding the insurance and the roof. So there's less than probably a handful of lenders that can, do this type of loan. So there is one lender that will lend on, a condo complex where the insurance issue, and non-warrantable, all this stuff, it's a mess, okay? Let's just call it a mess. But you'll need a 700 credit score, 35% down for your down payment, and your interest rate is going to be around 9.5 to 10%. Whoa. One, a lot of buyers aren't even touching this type of financing, right? One, they go, yeah, I'm not putting down 35%, and on top of that, getting hit with a 9.5 to 10% interest rate. They will turn around and go buy a warrantable condo that they could put 20% down and get an interest rate somewhere around, 8%. Okay? Right now, deals are falling apart left and right in some of these condo complexes, and agents like myself and one of my colleagues, we're on a scramble trying to find a lender that can lend on these, and then two, trying to get the buyer to take the lending, which they're not. So it's making it a whole lot harder for us agents to sell these types of condos, just because buyers aren't touching them with financing. So you basically need a cash buyer, which unfortunately cash buyers are coming in a lot lower. Okay. Now, the HOA of one condo complex has sent out an urgent letter to all of its owners requesting immediate payments of the insurance assessments that they sent out earlier this year in order to stay solvent. Folks, the condo market is about to be disrupted big time because of this. If you own a condo, you might want to rethink possibly selling if you had some thoughts. If you don't have any plans on selling, hey, it doesn't affect you. Ride it out, see what happens over the next couple, years, 2-3 years, see what happens. But if you have any thought on selling your condo in the past 6 months, 6 to 12 months, now's the time. I would pull the trigger, because the insurance issues and the insurance premiums are not going away, and this is what we're dealing with. And I have a feeling HOA fees and insurance assessments are even on the rise again because of this. Folks, that's all I got this week. If you have any questions whatsoever about the insurance in your condo, don't hesitate to reach out to me. I'll tell you who to call. It's pretty easy. Call your HOA. They're the ones that took the insurance and said, we'll cover the roof. And now when you go to sell, it's 10 times harder to sell, because now it knocks out probably 99% of the lenders that can lend on them. Folks, have a wonderful weekend. We have a huge slate of college football games tomorrow, a bunch of ranked teams. I'm excited to see what happens, but folks, have a wonderful weekend, and I'll talk to you guys next Friday. Have a good one.